Good afternoon, everybody. Today is Friday. It's the 7th of March, 2014, and this is Brian Shannon speaking from Alphatrends.net. Let's take a look at these markets here. We did have another solid week. The S&P 500 was up 1%. NASDAQ lagged a little bit down, up just a quarter of a percentage point, and banks really led the way with a 3% rally this week. So let's take a look at the charts and see where we are and where we have the potential to go. The S&P 500, as we know, bounced off of that 150-day moving average, which is where we had that trend line as well about 3 weeks ago, and we've just had a real nice uptrend since that. This market seems to be just continuing to find buyers, as we had a little bit of a scare earlier in the week as we gapped down on Monday, but we held key levels of support at 184, and the market surged higher from there. So we are still in a primary uptrend, obviously on the weekly time frame and on the daily time frames as well. Intermediate term, we're still in an uptrend here, nicely above a rising 5-day moving average. Next week, I think that this prior high at about 187 will be important as far as a first potential level of support. That's where we have that rising 5-day moving average as well. If we were to break down below that level and stay below it, I think it would give us reason to be a lot more defensive next week. And it seems like this market should pull back or at least pause a little bit, but the buyers keep coming in. So you have to look at the only thing that really matters, which is price action, and be sure not to be chasing stocks that have already made their moves. Instead, to focus on the low risk, higher probability trades, and that's what I try to bring to subscribers each and every day at Alphatrends. So back to the S&P 500 for a moment. If that level fails at 187 and we stay below that for, let's say, a half hour or more, then I think it would become prudent to be a lot more defensive on the market and expect that we would at least consolidate through time, if not pull back down and test that 184 level again next week. There's nothing indicating that the market should pull back, but we are pretty extended here, and you can't keep this rate of ascent up forever, but seemingly that's what the market wants to continue to do. The NASDAQ hit new multi-year highs again this week, and we did finish with a small percentage gain for the week. You can see where the NASDAQ a little bit underperformed here today, as it did break below its 5-day moving average and broke below a near-term support. So I think that you have to be a little bit more cautious on the NASDAQ until we get back above about 90.75. Back above that level, then the light goes basically back from yellow, where I would say it is now, to green. But looking at the NASDAQ, I think that the important levels to watch next week. First is this important area at about 89.75. It was prior support here, acted as resistance a little bit till we gapped above it. But since this gap higher, which occurred 4 days ago, the volume weighted average price is up here at 90.80. So there's been basically net selling on that gap, and that's something just to be aware of. It's not something that says the market's going to cave in, but if we fail to hold up at about 89.75, then it looks like 89 is our next level, and we'll see what happens from there. But again, the emphasis is here, this 89 level is this prior resistance, and we're in a primary uptrend. There'll be pullbacks within an uptrend, obviously, and that's when we become more defensive. And in the NASDAQ, it's time to be a little bit more defensive, just because it's kind of underperforming here. The Russell 2000 had a brief selling on Monday as well, but even on Monday, if you look at the action, it closed right on its high. So that that gap lower was bought into, and it closed down for the day, but obviously we had a gap higher on Tuesday, and now we're holding nicely above that rising 5-day moving average. So I think that, again, we've got this 5-day moving average right in here, and it's rising. So the intermediate term in the Russell 2000 remains innocent until proven guilty. If that fails to hold, then perhaps we come down and and test this trend line, and that first we'd have about 118.50-ish, and then that trend line there will be something to keep an eye on next week as well. Semiconductors had a good week also. The semis broke out here and finished with a 1.8% gain for the week, so nice movement in there. Obviously, as we had held the important support level that we've been monitoring at $43 a share. In fact, that was tested on Monday on the gap lower, and as the sellers weren't able to wrestle control I think he saw a lot of shorts get squeezed, especially once it broke out to those new highs here. So for the weekly time frame, obviously we remain in a major uptrend, and the innocent till proven guilty remains the same in this market as well. We'll be looking for if we see a pullback, the more important level to watch next week will be down here at about the 43.80ish level. That's the high end of this prior resistance in the band that we were trading in. So we'd like to see that hold as support. If it tests that, I don't think it would be a big deal. I'd like to see it hold and then be able to continue to move higher. And financials finally caught up a little bit here as well. So this group broke out nicely. We had been kind of neutral on this group because it was in this band of, in the sideways pattern here over the last 3 weeks. Well, we finally broke the high end of that, obviously, and this prior support, which was acting as resistance, now is something that it takes on less significance. Now it is down at 21.80, and if we see a deeper pullback down towards that level, we'll obviously want to see that hold. But we again are we've got, even on this the last 4 days, we've got a pattern of higher highs and higher lows. Some people ask me about buying up at this area, for instance, and I say you're chasing it a little bit, but if you have your stops, if you know your time frame, and you're looking for for upside here based on it breaking this resistance, for instance, with a stop right here, it's okay to trade that to the long side. But as it gets more extended, the risks of a pullback become greater, and that's where you have to be a little bit more careful. And that was evidenced this week in the biotechs. Now the biotechs have had this massive run, obviously. They've just doubled, more than up 150% since the beginning of 2012. So we've got this massive run, and we traded big volume and sold off a little bit this week in the biotech. So undergoing a little bit of distribution. There's no damage to the primary uptrend, though. We've still got a rising 10, 20, 50-day moving average. Obviously, the 100, 150, and 200 are advancing as well. But the sell-off in the biotech just does remind us that when the markets break below those 5-day moving averages and are unable to make a higher high and a higher low and get that 5-day moving average turning back up, that it pays to become very cautious, and for the more aggressive traders to be short in there as well. Now the biotechs seem as though they should be finding some support in this general area, and the reason I don't talk about the biotechs all the time, but I wanted to mention them this week because they are kind of telling us that, again, we have to be careful that when we have these extended markets like this, that pullbacks do occur. It doesn't do anything to break the primary uptrend, obviously, that this market's been in for years, but it just does give us a reason to look at our stops, adjust those, and maybe move to the sidelines and wait for lower risk setups to occur. Hope everybody had a good week of trading and have a good weekend. I will talk to you next week. Thanks.